Welcome everybody. I think there's so much going on in markets with volatility in just about every single asset we've got. I think within that we've obviously seen a very strong dollar. So I think one of the things I want to drill down on is what is driving this, where it can go from here, and exactly sort of how important this is to other markets, because it is. Obviously the United States is the biggest economy in the world. China is number 2, Euro 3. And we have, obviously, the US dollar is the world's reserve currency. So clearly, what happens to the dollar has an impact on many things. And don't forget that most commodities are dollarized. They're based in dollars, structured in dollars. And so therefore, a rising dollar has an impact on those as well. So it's an important factor that we need to bring in. It's something we need to understand. And if we look at the dollar index since November, you can see this quite steep climb that we've seen with very few setbacks, to be honest. We've had a couple, but the overriding uptrend is still in place, and it's still looking like structurally very strong on the charts at least. And if we look at the fundamentals, then some of those are pretty strong as well, because we have people like Fed's Bullard suggesting 75 basis point hike at one point or another would not be an option that necessarily the Fed would look through. We've got markets pricing 3 50 basis point hikes over the next 3 meetings, which is pretty aggressive for a Fed that's been dovish up to date. And so obviously, this has given an advantage through the yield differentials for the US dollar, particularly against the low yielding ones where central banks are not hiking, like so far the ECB, and also, of course, the yen. The yen is one of the last bastions of resistance to reducing easing along with China. And so, therefore, we're seeing dollar outperformance against many currencies indeed. And the anticipation about the FOMC outcome is building. So it looks like the market is expecting a pretty hawkish or aggressive Fed as we go forward. So, remember, the fight against inflation is only just starting, and the Fed are determined to tighten financial conditions. That means they're going to try and bring asset markets down, reduce the wealth effect, possibly even create a recession to get this inflation under wraps. But, there's a lot of implications for FX markets, but we have to remember other markets are beginning to raise rates as well. This is not a US-centric issue. And in fact, some countries are getting ahead of the Fed. So we've seen 50 basis points out of the Bank of Canada just the other day. RBNZ out in New Zealand raised 50 basis points just the other day. And they have already raised rates in the past. So what next for the Bank of England? What next for the 4th of May meeting for the Fed? At least 50 is expected after Powell suggested it was going to happen. And so we've still got the laggards there. Australia still not hiked. Bank of Japan, unlikely to. The ECB, they need to badly, but they haven't yet. Will they start to go in July as markets are beginning to price? Remember, pricing is important. We now have 75 basis points of hikes priced for the ECB this year, and yet we're not hearing that story from the ECB. So it's very interesting because markets are forward-looking. So after Powell spoke last week, it's clear that the markets want and expect to see a minimum of 50 basis points this meeting in May next week. And I think they'll probably get it. More importantly is what is going to be the signal from the Fed for the next meeting. So I think forward guidance is going to be interesting. One of the big questions out there for professional traders right now is, are markets getting ahead of exactly what the Fed can deliver? So this is a very interesting chart. So we've had this spike in yields up to almost 3% that we saw in the 10-year yield. That also helped drive dollar yen to new highs that we haven't seen for many years. And then we sort of ran into a bit of profit taking. We consolidated, and we're back now around 2.8% when I last just looked on my screen. So it's not going away. This high yield situation in the US is still there. So whilst we've hit the highs, this sort of consolidation or profit taking is expected in markets like this. They'd had a big move. So I'm not sure if they've gone too far, because if we actually look at where nominal rates are in the US and look where inflation is, rates are not really eating into the inflationary structure or the demand structure. Look at stocks. They're still fairly buoyant. You know, if we look at where they come from all-time highs, it's not that far. Now, remember, the Fed wants to tighten financial conditions. That means they want stock markets down for a while. And so I think there's more to be done here. And I wouldn't be surprised if we saw yields above 3% at some point. But, you know, the dollar has decoupled slightly from yields. We still see surging dollar markets, whilst even yields are coming off to a certain degree. So, you know, this dollar index is very strong. Now, there's a lot of the euro in this weighting of the DXY. So we need to be a little careful of that, because the euro has had some euro-specific issues thrown at it in the sense of Russian threats to turn off energy, trying to resource themselves away from unsustainable or unstable suppliers. And I think the war in Ukraine is also exacerbating issues there. So the euro is overly weighted within this dollar index. And so euro weakness has added to this. But there's no getting away from the fact that the dollar has been very strong. Sterling looks extremely weak. The yen looks extremely weak, and the euro looks weak. So the dollar's got some fundamental things behind it. But could we see some profit taken into the FOMC meeting on the 4th of May? Possibly. You know, but I do think the Fed is going to more or less deliver what markets expect. Again, the clue could be in the actual statement or forward-looking statement there. So we need to keep an eye on that. And I think, you know, the market is in one of those situations where expectations are one thing and the actuality could be something else. So we need to be careful what's going on there. If we look at the yen, we've seen a massive deviation between the Fed and the Central Bank of Japan, the BOJ. BOJ governor and prime minister have recently said they are sticking to their dovish decision-making. They control the 10-year yields physically in the market. They dominate the Japanese government bond market. They refuse to let 10-year yields go above 0.25%. Whilst they keep that in place, the yen is probably not going to strengthen a great deal, to be honest. And the yen is more associated with these yield differentials than it is with risk or anything else. But, you know, how big has the positioning got? Well, we had a clear out just recently, but here we are, we're back above 128 again. And to me, I think, you know, the structure of this, if you look at the technicals, still looks in place. And to me, the fundamentals have not changed. So I think, you know, we need to bear that in mind. Dollar CAD, there's another one, you know, big increases in rates, but look at the dollar against the CAD. It's actually done pretty well. So again, this forward guidance has seen other central banks move quite actively, and yet the dollar still dominates. You can see the dip down in dollar Canada there when the BOC was hiking rates, and we had the conversations from the 13th of April. That dip down, another dip down as we saw that, but Powell dominates. When Powell speaks, the dollar moves, and you can see this move back up. Very strong move indeed. So to me, the dollar is king at the moment, and I'm not seeing an awful lot at the moment that can change that. I mean, the fundamentals look pretty solid. If the Fed does carry through on its threat to raise 50 basis points, and the technicals look pretty solid as well. So, you know, if we're going to start looking forward, obviously we've got to look at 4th of May, 50 basis points priced. Is it enough to keep the dollar? Could we have one of those buy the rumor, sell the fact issues with the dollar? That the Fed delivers 50 basis points and the market says, well, okay, well, we expected that. Let's take profits. A lot of that may depend on the forward guidance that we get. Are they going to suggest more is coming of that sort of size? And with market pricing another 50 basis points, I'm not sure the Fed really wants to disappoint or shock the markets. I think they're happy to get rates nearer back to neutral. And so we could get a fairly hawkish hike, as we call it. And that's a balled up or an aggressive Fed after hiking, suggesting more to come. So I think, you know, decisions from other central banks are also going to be very important. We've got the Bank of England on the very next day, actually, and looking at sterling, there's some concerns out there about the health of the economy. Is the UK economy the weakest one out there at the moment? It's looking a bit like it. So what damage will hikes do? So I think that's really important. We've got an Australia RBA meeting on the 3rd of May. I really think there's a chance of 15 basis points hike there to take it up to 0.25. CPI was strong just yesterday, and I think realistically they are falling a little bit behind. So with inflation above their target zone at the moment, I think they're going to hike. I think it's only going to be 15 basis points to get them going, but it's on the way. Markets are beginning to price that. A few bank analysts are beginning to suggest that. I certainly think they will. Nothing from the Bank of Japan. I don't see them changing anything. If they were going to change anything, it would be tweaks to their policy. I don't think they're going to shift the area of yield curve control to any higher than 0.25. If they did, yen would strengthen pretty quickly. I don't think they want that. And then, of course, we've got the European Central Bank on the 9th of June. Bit of a gap between now and then, and they seem reluctant to get anything done until they have finished their QE program. But could we get a hike in July? The market is pricing it now, and they're pricing 3 more before the end of the year. I'm not sure the ECB are quite that hawkish, but that's going to be very interesting to see how they pan out. So it's not all about the Fed. It's about the other central banks as well. But at the moment, this dollar has got a very good story behind it and a very good technical structure behind it as well.